One of the many reasons I started this channel is because I wanted to teach myself about investing. I think this tech is cool. And the only way to invest in it is to either invest in the private markets or to buy shares of companies that are publicly traded but ultimately are investing in the private markets. So as a retail investor, I need to learn about the private markets if I want to own shares in these public companies. Agronomics and Cold Food Science being those companies. One of the things that I did was to sign up to a private market trading platform so I could access a little bit of data, not a lot and not on all the companies I'm following, but a little bit of data just to help me better build my investment thesis. This company in particular has built a tool that I find very useful. It's an IPO stock tracker, and I found this really helpful to visualize investment timelines, namely how returns work at the different investment stages. So the best part is you don't even have to sign up. It's a free tool and you can explore it directly on their website. And so this just allows me to visualize things. Let's say Agronomics or Cold Food Science have bought Series A shares, Series B shares, Series C shares. What do those investments look like over those different investment stages? If a company does IPO, how does that Series A investment differ from the seed stage investment from the Series E investment? 2021 was an all-time record for IPOs, and so this company set out to measure how those stocks are doing today, and this looks at companies that were on their platform. One that I'm going to look at just because I'm into electric vehicles, Rivian. In 2019, Rivian raised their Series A. They raised $600 million at a valuation of $4 billion. Amazon would have bought their shares for $5.11. A number of years later, Rivian goes public. They IPO near the end of 2021, and the IPO price was $78 a share. Today, well, December 1st, 2023, share price was just over $18. So if you bought at the IPO, today you'd be down 76%. But if you're Amazon and you happen to still own those Series A shares that you bought in 2019, you'd be up 252%. Then you have these firms who they bought at the later stage, Series F, about 10 months before they IPO'd, they'd be down 50%. I really like this as a visualization for me because when I'm looking at Cold Food Science or Agronomics, I'm looking at what stage of investment have these firms gotten into the investment. So are they seed? Are they Series A, Series B, Series C, D, etc., etc.? And this just helps me visualize better because this is a long-term investment. What could that mean for these companies when we do our valuation models? They have a number of stocks in the food tech industry on their platform, and they have 4 of them where they have some interesting data. So we're just going to look at each. There's been some negative press on the company recently. The last closed trade, this is data they have for only 4 food tech companies. But the price reflects the price at which the last trade in this company on this platform. It can include secondary trades in any class of the company's security or trades in units of funds holding the company's securities. Okay, what does that mean? Any class of the company's securities. So that means someone could have bought and sold some Series A shares. Khosla Ventures, for example, 50 cents up to 75 cents. They could have bought and sold some of those shares. Basically, we're saying the last closed trade, someone did a trade at $2 a share on September 22. Right now, there's an active investment opportunity. So someone is interested in selling some shares for $1.31 per share. So this is representing, over a 90% decline from their latest fundraising round in September 2023, Series F, where the price was $23.52 a share. So that's pretty interesting. Again, this isn't completely accurate to say that this is now what the company's valued at, because again, this number can mean someone's trading a different class of share. It can also mean that trades in units of funds holding the company's securities. So units of funds holding the company's securities, that could be someone like Agronomics as an example, or Cold Food Science as an example. Their funds, it's not going to be those funds, I would think, but it could be, anyone. So really this number doesn't tell us that much, but it just kind of gives us an interesting example of where the private markets might be, why they're so low. Maybe they'll rebound, I don't know. but I put together the 4 companies that are on the platform. Possible Foods, Eat Just, Perfect Day, every company. So we have really between 70% and 95% loss right now in the value of these companies based on this trading data that's happened. I thought that was interesting. I saw the email. Just give a bit more color into how these private markets work. Important to understand, even if you are investing in agronomics and cultivated science as a public market investor, because actually these companies are holding private market securities. Thanks again for watching. We'll catch you in the next video.